Hello, what's up, my people? This is your guy MKFX, and we are going to be doing a top and down analysis on GBPUSD. And as you all can see, I'm already looking at buying the GBPUSD. I have a buy setup. So on this video, we are going to be doing a complete breakdown of our top and down analysis and see why we are buying this. So, if you're first time watching my video, please do well to subscribe, like, and share this video. Down the description, you're going to see a link to my WhatsApp and Telegram community where you can get to me personally. And if you're interested in learning Forex trading, also feel free to text me to get what you need for you to enroll in my mentorship program. So let's go straight to the point and look at why I am looking at buying GBP USD. So I'm going to start by clearing everything. As you all know, my analysis starts from higher time frames. So here we are going to write a story on this, starting from the 3 hour time frame. So on the 3 hour, 3 months, not 3 hours, sorry, 3 months time frame on GBP USD. So on the 3 months time frame on GBP USD, we can clearly see that we are bearish. Why? Because we can see a series of lower high, lower low, a lower high, a lower low, a lower high, and price has come down, giving us a new lower low. So where's price going to? Price is heading up to give us a new lower high before we see the continuational move to the downside from the 3 hour time frame. So what does this mean? It simply means that price is heading to the upside now to give our retracement. So the question is, where is price heading to? On the 3 months time frame, we are going to mark out a swing high and a swing low. Now, when we mark out this swing high and swing low, the question is, what is price doing? We can clearly see from here that price is giving us what we call a retracement. And on this retracement, price needs to get to the premium level before it finds sell pressure to the downside. So the first premium level we are going to mark out from this swing high to the swing low is the 0.5 level, because price can easily react from there. So the 0.5 level of our FIB2, we have it at this point here. We have it at this point here. So we are going to be taking note of that point. So we are expecting GBPUSD to buy right up to this point. So let's go to the monthly time frame and see what price is giving us. So on the monthly time frame, now on the daily time frame, on the 3 months time frame, sorry, we already know that price is going to be buying to the upside. So here's the order block at the 0.5 level from the monthly time frame. So what are we expecting? We're expecting price to buy right up to this level before we can find sell pressure. Now, this best explained on the monthly time frame. Why? Because this is the last break of structure we had to the downside. This is the last break of structure we had to the downside from the monthly time frame. And here is the origin of that break of structure. So we are expecting price to come to this zone before buying. And here is the inducement zone here. So before price sells to the downside, we are expecting GBPUSD to get up here. So as we scale down to lower time frames, we are going to be looking just for buy opportunities on GBPUSD. Why? Because our overall direction is bullish. Now, take note, before you do your top and down analysis, you must first of all look at the overall direction of the market. Now, you need to identify if you are trading a counter trend or you are trading a pro trend. At this scenario, we are trading a counter trend. Why? Because we are buying, but remember the overall direction is bearish. But why are we buying? We are buying because the current trend is from this swing low to this swing high, which you can clearly see that price is pushing to the upside and it is coming to make contact with this monthly order block. So with the monthly time frame being bullish, look at price has been bullish for 1, 2, 3, 4 months. Price has been bullish for 4 months. So we cannot be fighting against this trend. Rather, we can only follow the trend and trade along with the trend. So this is going to take me straight to the daily time frame, not passing through the weekly. Why? Because I already know the overall direction of the market. So I'm going to go to the daily time frame now and look at how I can mark out daily structure and find a way to fit in to this overall trend. So on the daily time frame, I'm focused on this swing low. Sorry, let me use on that too. I'm focused on this swing low and this swing high. Now, what is the structure or what is going on within this structure? So if I want to mark out structure from this swing low to that swing high, I'm clearly going to see that I've been having a series of higher highs and higher lows to the downside. As you can see, this is a higher high, a higher low, a higher high, a higher low, a higher high, a higher low, then a higher high, and another higher low. So the question is, where is price heading to? Where is price heading to? Where is price heading to? That's the question right now. Where is price heading to? So let's try to answer that question as we scale down to lower time frames. So now, what am I going to do? I'm simply going to mark out the last break of structure I had to the upside from the daily time frame, the last break of structure I had to the upside and its origin. So if I want to look well, I'm going to see that this is the last break of structure I had here to the upside on the daily time frame. This is the last break of structure I had here on the daily time frame. And the origin of this break of structure is actually here, right? But we price sell that down here. I'm just going to put this as pending because it's kind of unrealistic for price to sell right down there. Now I'm going to scale out to lower time frames and look at what price is doing. So on the 4-hour time frame, what can we read as market structure? All right, guys, on the 4-hour time frame, we can see that when price took out this high, we can clearly see that when price took out this high, another structure was still formed. Another structure was formed. Why? Because we had an internal structure from this origin. We had an internal structure and we start price was giving us series of higher highs and higher lows. So from the 4-hour time frame, this was the last break of structure we had to the upside here, right? This was the last break of structure. So we are telling a story and we want to see how this story ended. So this was the last break of structure to the upside and its origin was this other block here. So we are expecting price to tap in this origin and probably buy to the upside. So what happened? Price tapped into the origin. As we can see, though the origin failed, but it pushed to the upside from there after mitigating it. So price rather preferred to take this other block below here, right? So this was the other block that pushed price to the upside. Now, when price push here, it means that price has respected the last break of structure and price is about to continue its upward movement. So how do we pick our entry? How do we pick our entry? We are now focusing on this swing high here and the swing low here, right? As we scale to lower time frames, we are focusing on this swing high and this swing low because price is now trading between that range. So let's go to the 1-hour time frame and see what price has for us. Let's go to the 1-hour time frame. Now, on the 1-hour time frame, what can we see? We can clearly see that price was trending down, giving us a series of lower lows and lower highs. But after price made contact with this low, what happened? We can see that price actually swept this liquidity here. This was a liquidity sweep here, which happened. And after that liquidity sweep, price went up to take out our last high, which was this high. And this was giving us a kind of like a shift in market structure from the 1-hour time frame, from downtrend to uptrend, right? This is a shift in market structure. Now, the question is, where is the origin of this overall move? The origin started from here. All of this move originated from this other block here. So we are expecting price to drop back into this other block. Now, the question is, look at this area here. It shows that it has been mitigated. But if we go to lower time frames, like our entry time frame, which is the 15 minutes time frame, if we go down to the 15 minutes time frame, we are clearly going to see that back to the origin. Let's go to the origin. All right, on the 15 minutes time frame, we are going to see that we have an unmitigated order block here. Now, this is the unmitigated order block, which we are expecting price to come back to. We are expecting price to come back to this unmitigated order block and get it mitigated. Now, all of this here is going to serve as our inducement. All of this is just going to serve as our liquidity. So this is going to be our liquidity here. This is going to be our liquidity here, or our inducement. Let me string this so you can see the charts from the origin to the end. So this is going to be our liquidity here. And what do? We are kindly going to wait for price to trade now to our order block. We are going to mark out the last low, which is this, and our order block is just going to be below it. And we are going to be targeting the swing high of the, right? We are going to be targeting the swing high since we are buying. So our entry is going to be here. Our entry is going to be here. Our stop loss just below the swing low, 14 pips. And our take profit is going to be 292 pips. That is a 1:20 risk to reward. A 1:20 risk to reward. So guys, this is my complete technical analysis on GBPUSD. As you watch this video, if you have any question, just comment down the comment section what question you would like to ask, and I'm going to reply you. Remember, if you want free signals and also enroll for my mentorship, go down the description, click on the link that is going to take you to my Telegram community. There is also a link that is going to take you to my WhatsApp, and I am going to attend to you. Do not forget to subscribe on this video. Remember, this is a 1:20 risk to reward ratio we are looking at, and let us see how the market play out this week. Peace.